HPQ is making headlines. Let's talk about that. Hey guys, HPQ has been getting some spotlight lately. First, when Morgan Stanley downgraded them, both HPQ and Dell, as they see some weakness in the PC and hardware sectors. Probably because of the whole sanction thing and the slowdown of spending post COVID. Second, when they announced that they're acquiring Poly for $40 per share, an enterprise value of $3.3 billion. Mind you that the company they bought, Poly or Plantronics, is also a public company but an unprofitable one, at least from this data here. And lastly, of course, another move from Warren Buffett's Berkshire Hathaway after revealing a 121 million share purchase worth of $4.2 billion, a roughly $34.71 per share purchase, amounting to a stake of about 11% of the company. He'd easily own the company in the coming years, even just after acquiring Allegheny Corporation. Wow. Let's look at their financials. Actually, I've screened this before and it was in my watch list. You can watch them, just go to the videos tab. First metric, we want an EPS multiple lower than 3. It's 1.11, meaning they do a good job increasing their EPS through buying back shares. I guess this is why Warren Buffett loves the stock. Look at their share buyback, 558 million shares in 5 years. That is aggressive. Look at their dividends, only 20% of their earnings. Next metric, we want to pay a dollar or less for 1% of their margins, meaning we want to pay 1 PE for 1% of their margins. Based on these margins, I have an assumption of 4, 5, 6. Very low, I know, but that is discounted with my margin of safety already. Paying premium isn't necessary with this growth. It's trading at 0.9 discount. Remember guys, Warren Buffett owns Apple. This isn't Apple. Apple has 4 times HPQ's margins, around 20 to 24. This stock has 6, 7, 8, 9. I don't know exactly what they see about HPQ. Although, look at this. If he has a lot of money on the sidelines, I think buying HPQ was a good move. I have a fair value of $38.54, intrinsic value of 51.7. This is from Guru Focus. I'm only a buyer of HPQ at 456 PEs. I have a high price of $33.42 by charts. Actually, I was waiting for it to close the gap of $31.77. It was on its way, but then this happened. I cannot catch a break. Anyway, let's see their earnings expectations. They're expecting a revenue of $16.206 billion and an EPS of 1.05. That is higher than their previous Q1, quarter 1 2021 results of 15.877 billion revenue and 0.93 EPS. If they beat earnings, I guess the stock will skyrocket from here. But if they disappoint, maybe I'll get that gap closed and only then I am buying HPQ stock. It was only in my watch list because I don't buy stocks at fair values. I was very patient for this gap to close. I personally don't like HPQ acquiring Poly. One, it's unprofitable. They're not making money. I don't know exactly what way they will help HPQ. And second, looking at their financials and their history, they're also a very low profit margin company. So I don't think HPQ acquiring Poly will help increase their margins, let alone, make money and become profitable. But maybe I'm wrong and maybe I'm not seeing something here. I will look more into Poly before I'm buying HPQ. Also, if they're acquiring Poly, this should reflect in the share price. As you know, they will be using cash flow to purchase the company at $40 per share, 3.3 billion worth. If you can buy it below Warren Buffett's average price of 34.71, then maybe you can outperform BRK. When the stock market opens, HPQ will open at more or less $39. That would mean the PE by then would be 7 or higher, and that would mean overvalued in my metrics. This 3 metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.